Well, the market was on fire last week. Again, we saw the S&P 500 up over 3%. Again, we've seen the market rally huge recently. Basically, investors are front-running peace at this point. There's been a lot of confusion in the markets about whether the Strait of Hormuz is open, closed, if we're going towards peace. But there are indications that we might be moving that way, and investors have jumped all over that. And we'll talk about what the implications are now. Is it all priced in, or is it not? Let's start by taking a look at what happened in the markets last week. So first of all, here you can see that we saw the S&P 500 up 3.5%, but it was all the growth sectors up. We saw a consumer discretionary sector, which had been performing poorly, up over almost 6%. Communication services 3.7%, tech 6.0%. So those are huge numbers. But if we take a look at the defensive sectors, consumer staples was up 1.1%, healthcare barely positive, and utilities was down 0.5%. So that's a huge discrepancy. So we saw this money flow from here into here, and nobody wanted to miss out on the rally. A lot of FOMO going on. There's also options expiry on Friday, so we saw a lot of gamma positioning with the dealers, etc. Everything contributed towards pushing the market higher as long as there wasn't bad news and there was apparent good news. And there was, at least from the announcements that were being made. It's hard to tell if what's true and what's not true on both sides of the war as far as their public statements go, but it makes it a difficult situation. If we take a look here, we can see that the TSX was up 1.4%, so not nearly as strong as the S&P 500, up 3.5%. NASDAQ up over 5% last week. Small caps, pure risk on, up over it was up 4% last week. Emerging markets, once again. So we saw this real move towards risk on last week, and really a little bit of a FOMO situation. And if we take a look here, we saw that Trump says the war is going swimmingly and should be ending pretty soon. We've heard this before, but there were some other very specific announcements that led investors to believe that this might be the case. We saw that the U.S. says that Iran's looking for $20 billion to hand over the uranium. And ironically, Iran came back and said, no, they don't want to hand over the uranium. But there's a whole bunch of negotiated plan details that were put up by the U.S. that Iran has denied. I don't know who's trolling who here at this point. It's very difficult to tell. We saw the Iran previously had closed the Strait of Hormuz, and then the White House or the U.S. was trying to open it. And then with this plan that came out, we saw the White House come out and say, well, we're going to blockade it. And Iran came along and said, no, we're opening it. And it was it's like a dozy-do partner, swing your partner around. They flip positions back and forth. Trump says they're trying to get cute with the whole thing. Be good. I'd love to see some sort of resolution here, but well, it's right now the Strait of Hormuz is closed at this point. If we take a look here, we are seeing some positive developments. And one thing I like to look at third parties' announcements here in Turkey. Basically come out and said there is some positive developments taking place, and there are still some disagreements along the way here, but there is some positive developments. So I think we're trending in the right direction. Not sure if this is going to hold. There are other factors involved, such as Israel, etc., but we'll have to see what happens. So last week it was really a panic buying that took place. We saw CTA step in and buy $86 billion in global equities over 5 sessions here. And so we saw this big, huge splurge right here take place. And we've seen this in the past where we've seen this really get juiced up here. But this was a real juicing higher risk appetite among institutional investors went skyrocketing. So if you take a look here, though, on a weekly basis, it was negative before. And here we have this huge uptick, basically, in this taking place. So, a real flip. We're going to have to see if this holds. But here's the NASDAQ. It was up over 12th consecutive day. This is actually, I think, on Thursday. I think it was up 13 consecutive days in a row. Definitely front running here. We're at all-time highs. We saw the S&P 500 hit an all-time high midweek. And as the S&P 500 hit an all-time high, it was only 15 stocks made their 52-week high, which really shows you the narrowness in the market breadth here. That can change. But we really need to see the market breadth really expand out here. Now, so we're all-time high. We're higher than where we were before the war started. And we still do see some sort of curtailment as far as the energy sector goes at this point. As far as being able to produce oil. This isn't the switch. We don't flip it on and everything goes back to normal. There is a lag effect. And as much as the energy sector has been shut down in certain areas in the Middle East, it's not coming back up fast. So it's still going to have an impact. But we're seeing investors really sell the energy sector and move over to the technology sector. Here's Eric Nuttall's tweet that came out here, and he's talking about the Strait of Hormuz. And he just goes through some basic math and says that, look, the voyage time for tankers is 25 days to Asia, back and forth. And you start working this out, there's some severe problems. 80 facilities have been damaged. 1/3 of those severely have been damaged. This is going to take time to repair. And so there's going to be some premium on oil. It's highly unlikely you'll see oil head automatically back down to $50 if the war is over here, because it's going to take some time to ramp up this production again. Just to top it off, for a crazy week last week, we did see a couple real meme type of investments just fly higher here. Here's an iced tea company. This reminds me of the 1990s when this happens. Iced tea company comes along and says it's pivoting to the blockchain, and it went up 200%. Okay, there's no real justification for this, but this just shows you the excitement that's taking place. We also saw Ava's budget last week all of a sudden go skyrocketing higher. Once again, one of these meme stocks. Allbirds announces, so Allbirds is a shoe company, and they announced they're going into AI, and their stock went up more than 300%. This is insane for this to be happening, but it just shows you investors really have this pent-up investor appetite. We'll have to see if it can hold here. So if we take a look at what was taking place last week on Canada and what's coming up, well, we can see here that on Monday, we can see that the year-over-year CPI is going to be coming out. And if we take a look, it's expected to come in at 2.6%. If we take a look at the core median, 2.3%, and the trim, 2.3%. So it's still above 2% as far as that goes. And if we take a look at the prior, so these numbers are actually expected to move higher from where they were before. And this is the danger. The Bank of Canada has been talking about this, that we could see inflation go up in the short term because of what's happening in the energy sector as things get transferred in, and they just want to be hesitant to cut back. We really haven't seen that under 2% trend happen in Canada. So I expect the Bank of Canada will continue to remain fairly conservative. If we take a look here, what's happening in the U.S., last week we saw the PPI numbers come out, and they were better than expected, which is good. So this is the producer price index. So this isn't consumer. This is what the producers are paying as far as that goes. And you can see here that the survey, it was 4.1%, it came in at 3.8%. That was typical for all of the other PPI numbers that came out. So it actually helped to support the market as well. If we take a look at the earnings coming out this week, we don't see any really, really big hitters coming out. There are some big companies. We got 3M. We're definitely watching 3M come out. GE Aerospace here coming out. United as well. On Wednesday, we got Tesla coming out. A lot of investors will be following that. IBM, Texas Instruments, Intel on Thursday. So we'll have to see after the bell on that. And then we get the gold. We get Newmont coming out Thursday after the close as well. On Friday, we get P&G coming out after, well, actually it's before the bell on Friday. So some big fair-sized companies come in. It's starting to get busy as far as earnings season goes, but nothing really the big, huge companies. Last week, we did see the financials come out with their earnings, some of the U.S. banks, and it wasn't good. So if we take a look at the price action for U.S. banks, here we did see they did okay here. I'm using the XLF ETF, okay? But if you take a look, yeah, they were positive last week on earnings. But look, they underperformed the S&P 500. Now, that's a lot to do with a risk-on move that had shifted into tech. But as a group, we didn't see that huge outperformance that you expect on strong earnings. So investors are reacting not so strong to the earnings yet. Here's JP Morgan here. You can see that had a little bit of a rally last week and then actually turned down towards the end of the week. And the overall performance is lower for JP Morgan, and last week included as well, relative to the S&P 500. So we haven't got a really definitive strong signal from the earnings yet. Okay, and we just saw the OPEX expiry on Friday. We'll have to see what happens. Here's the S&P 500. Look at this move here. Now, previously I'd said when you see this rounding pattern, you typically don't see a substantial rally from that at much higher than where you are here. And we have gone to all-time highs here. And I think this really has been a bit of a case of FOMO. If you take a look at the RSI, we were oversold here. And oversold is actually a good place to buy here. If you go back all the way here, whether it's there, okay, all the way across. And we did see investors really pile into that. And you can see that now we've gone to this all-time high. We'll have to see what happens because guess what? According to the RSI, we've now become overbought. And now there's a difference between overbought and oversold. And you can see here that when a market becomes overbought, it can stay there for a while, much more so than when it becomes oversold. That's because of the buy the dip mentality that takes place. So we are overbought here. We'll have to see if this is just really a FOMO rally here that just doesn't have legs. But right now, I think if we still see some positive developments take place as far as the war goes, and that hasn't happened on the weekend. We've seen a lot of statements being made, but there seems to be a really big gap between the Iranian statements and the U.S. statements about what's taking place. And so this is not convincing, and we could see this a race here if we find that there's some sort of escalation that's taking place. Trump did come out on the weekend and say they may have to bomb Iran. The messaging is all over the place at this point, so it's very difficult to tell. But if we do start to see some sort of escalation, we could see this get reversed quite quickly. Now, if we don't, I think the market can move higher here for a little bit longer here. I don't see it moving substantially higher from this point. It has reached its all-time high. It's gone past where it was at the beginning of the war. But the momentum will likely fade. If we look on a seasonal basis, it's the first half of April that tends to perform well for the S&P 500. It's the second half we tend to start to see it slow down here. I think there's going to be a little bit of digestion taking place this week as investors try to figure out what's going on, because that was a really sudden move. And if we get positive news, the war's over and everything else, and the big huge deal signed, everybody believes it's in place and it's not going to be violated, the market can move higher. But if we don't get that, I think we're going to be into some sort of consolidation phase on a go-forward basis. I think front-running part of this is probably over at this point, now that we've reached all-time highs. And it really is dependent upon, the market's dependent upon what's going to take place as far as the war announcements and earnings as well, coming in here as well, are also going to start to have an impact. We don't see big economic news being made as far as the States go. So mixture of earnings and really a war jibe and how investors respond to it. But once again, it's going to be a crazy week. Thank you very much for joining me today. If you like this video, please click the like button and please consider subscribing. Thank you.